This is Damon Stevens. Federal Bullish Day is Sunday, October 9th, 2022, and the stock market prep for our week this week. And hopefully you guys have a great weekend and you're ready for a new week. Boy, Friday was really a tough day for those long-term portfolios as the market came down after a good job report, basically saying unemployment's still low. That's being received as bad in the market because that means the Feds will continue to raise interest rates, which is affecting businesses and companies around the globe. So, um, good news is bad news for the market. Now the question is now what happens this week on Thursday when CPI data comes out? Is that the tipping point either to have the market drop out down to new lows and then some, or is that a chance for us to possibly have our next little tiny rally with the last one lasting 2 days and the prior one lasting 4 days? Now we're kind of down here, it's even slower. So let's get into it, take a look at what's going on, see how we can prep for this week, and make sure that we're prepared one way or the other, especially for Thursday. So looking at the close of the week here, Friday, Dow Jones closed down 2.11%, Nasdaq down 3.80%, and S&P 500 down 2.8%. So nice red day right after that report. And we talked about that on Thursdays. We were preparing for that discussion. Said watch pre-market, watch for that report, and then we talked about that. Anything that's good news is bad news for the market when it comes to job reports. So we'll see how CPI data comes out on Thursday. You can see here the scanner, we really didn't pick up anything that we wanted to grab on the small cap side. So let's get into some charts here, see what's going on. So E-mini futures right now, you can see that, of course, we're still down. We're kind of flat at the bottom. So looking to see, do we have a recovery? You can see with this flattening out here, it gives you a better chance that possibly get a little pop here and a little retracement of that huge drop on Friday. So we'll see if it does drop through the lows from Friday. Definitely looking for more downside into the market. We'll get into more detail on some of these charts, but just want to give you a general idea how the market is right now. Here on a 15-minute, you can see here's the low here at 36.18 on Friday. And you see that we're kind of trying to bump up here a little bit here. We haven't come down those lows yet, kind of in a little tight channel here, trying to bump up against the top here and see if we can break out. So we'll see if the market's able to do that as we get closer to the market opening. You can see here we got a little wedge started here on the futures, and we're down here at the bottom trying to break out. So we'll see if we can get a chance to break out, or do we break down through that wedge to the bottom side. And here's the other thing that we're watching. So, looking at past charts as an indicator of possibly where a future is. You can see here the S&P 500 E-mini futures. This is November. This is basically 2007-2008 crisis. You can see here on the 20-month moving average. We kind of came down here, settled out, kind of broke back up to the upside, and then fell through, and then way to the downside. And that's kind of where we're at right now. We're kind of at that 20-day. We're right at the edge, and we almost broke through it on. We really kind of broke through it on Friday. You see here almost a lower. We almost put in a lower monthly, and if we do, we're in the danger here zone of dropping, and that's where this is really a critical area for support. We got to get really moving our monthly back above these averages here, or otherwise we're gonna possibly have a really bad downturn here. So hopefully you're protecting your profits along the way. You're watching your long-term portfolio and your short-term day trading if that's what you're doing. And again, even with all the other countries that are, looking for stimulus or trying to help their, ease up on their interest rates, the Fed's continue committed to not do that, to continue to have a strong hand, and that's what's affecting the market. You see right now too, since 2000, at least since tracking 2000, the market's never been shorted more than it is now. Just extreme fear in the market right now. So you can see here, this is put contracts. You can see here just a massive short in there where people are really hedging to a huge downside. If you're looking at like midterm elections too, seasonally pattern since 1946, typically up until October, we usually had a very positive month on average, and then a huge fall off to new lows by November. And then November, you can see it starts to climb up here, and then it kind of rallies back up in the end of the year. So, do we get the same thing this year? It's hard to say. But if we were, this week would still be a positive week, at least up until Thursday, to the upside. And then typically, we could possibly drop off from there. So we'll see what happens this week. Very critical week. Again, this is not predicting the future. This is just taking averages across the past to give you an indication of what's possible. So just keep that in mind. Again, critical data for this week. So here's the calendar. So we hear from, this anytime the Feds are speaking right now, it's just swinging the market back and forth. So just be real careful out there because the market's going to be really choppy with the sensitivity around the Feds here. But you see that we have the Fed speaking on Monday, which could swing the market, back and forth. We have them on Tuesday. We have it on Wednesday. Wednesday becomes more important because you have the FOMC meeting minutes. And so Wednesday, 2 o'clock Eastern time, that could be a volatility moment and prep for the next day, which is the Thursday when the core CPI numbers come out. So this could be a teaser and setup for the Thursday meeting, which is going to be critical. Also on critical is jobless claims on Thursday as well. So Thursday is probably the most important news date on the week. And then Friday, we have retail sales coming out. So pay close attention Thursday. Really, Thursday is going to set the tone possibly and the catalyst for, the market, either to the upside or downside. So just be careful trading out there this week with this critical news coming out. And if you look at the inflation rate, this is really, as long as this inflation rate continues to stay up here, it's at 8.3 right now. As long as it's staying up there, this is as of, this is looking at the August reading. So we actually don't have, the data. So this question is, does it keep coming down or are we still elevated? So that's what we need to watch is see if that's going to come down or not. And that's going to affect, the decision the Feds have on interest rates. And if you haven't subscribed, definitely subscribe to our channel, like our videos, and we can continue bringing this content to you. And also, if you want to join, we have free chat and daily watch list that we post on this link right here that takes you to a Discord server. So definitely join us there. And if you're interested in becoming a member, this is a dashboard where you have access to live trading. Several trading courses include a masterclass and several courses on different techniques and methods of trading the market. We have group training, and also one-on-one training. So definitely take advantage of that. Love to have you join us, see how we can make some money together. Looking at some detailed charts here, now getting to Oxy. It really had a huge bull run. So energy, as the market was selling off, energy was the one that kind of continued going to the upside here. And so you can see this nice run Oxy's had several days now for a couple of weeks. So it now settled back a little bit on Friday, pulled back down into this candle. So we wanted to see if we can continue to hold, and we have strength there in the energy sector or not this week. For solar, pulling back, so it's a little concerning. We're down below the 20-day moving average. Now, as long as we don't break, where we were back here at 127.07, we have a chance to bounce back up. So still watching for solar, especially after that last breakout we had. Netflix continues to grind. Now, the only thing I like about Netflix is it had this wonderful grinding right up here, up towards even past this 100-day moving average. And now we pull back below our trend line for the first time. So seeing that weakness is not a good thing for Netflix. As long as we don't get below this 214.69 area, that should be support. If we break this, now we're coming into this channel down here, new lows, and Netflix now is, good sign of risk of tech falling again. Microsoft back down towards the bottom again. Microsoft finally broke out. You see this, it kind of was on its own little island here. Very bullish, and it just gapped right back down. So we have this huge gap still, and Microsoft's down at the bottom again towards those lows again. So we'll see if we can hold. But if we break down, past these levels this week to like this 232 level, we could very well be at the point of a drop off here. So just something to be careful with. And Tesla too. Tesla's dropping right off. So huge negative movement on Tesla. We have some big gaps up here too to fill. So it's just a huge weakness across the board right now. So that's where you need to be careful. And you can see here, this double top we had, this is a measurement of that double top. Typically, at that neckline, when it breaks, which it did here at that gap fill, this is typically, how far down you're going to come. So we're almost there. So really expecting, Tesla could very well come down to 215, maybe even this 208 level support we have down here, which is this pivot down here. If we don't bounce there and fall through, this is probably the chance. This is probably the time where we're having, basically a fallout in the market to new lows. So really pay attention to those levels right now because we're right at a critical level at Tesla. And you see here this little bear flag being set on Tesla on a 1 hour chart here. So Apple on daily, we have this little wedge here. You can see this little pivot support here. We came up, didn't even make it to the top of this channel, upward channel, came right back down. So as long as you don't break to the downside on this wedge, which is possible, then we're still playing with this in this area and have a chance to break up to the upside for a potential rally, but it's looking less and less possible, especially with the news that the Feds are holding hard to their numbers and they're continuing to raise interest rates. NVIDIA too, trying to bump up here, had this little island up here, and then just came slamming right back down to the lows. So again, NVIDIA is at the breaking point of breaking down even further. And the 10-year yield, obviously, as the markets come back down, you can see the bonds, money flew right back to the bonds. The bonds did get the support off this upper line here. So you can see we tagged upward deviation, pulled back, and now we're running back up again. So look at this, I'm looking at this, really to break new highs here as this comes up here, especially with the Feds, being hard on, continue to raise interest rates. And you see here on the 2-year yield, same thing, going right back up towards those highs. Definitely feel definitely going to see this breakout, probably clear up here to this 460 level, which means the market's going to come down to new lows. Dollar elevating back to highs again, same thing. As long as the dollar's up, usually gold's down, and also the market. And if you look, gold is down, pull right back down. So that's where these charts and indicators are helpful. And as you're preparing and planning your trading, because they do help you understand it, and you'll see correlations. And we talk about this every night as we go through these, that there's a correlation between different stocks and commodities and bonds and everything else. It's all connected. And so usually if you look at one, you can predict the other one. And you see that over and over again. And then the VIX obviously, is elevated with the market coming down. VIX is elevated back up, back out of this wedge again. We were hoping it was going to come back tight into this wedge, and it did not. Back up. We break 35, bad news for the market. You see here, we've kind of come to test it here back in May and June, which is where we put our lows in. Came back here in September here, where we tested it again. How many times does this get tested before it breaks through? And if it does, the market's kind of come slamming down. So just be careful out there. So we're right back up, heading up towards the highs there. So that's where we're paying close attention. On the SPY on a 1 hour, here's another thing. So here's the same type of chart here. So you can see where we kind of put this double top in here, and that was that little neckline right there in the middle. You measure that distance we ran to the top there on that little rally we had. You can see when we broke that neckline, the same distance as usually where we come, which is right where we're at right now. So we've come down and we're tagged that level right there. Now, if we break through lower, now we're into this range here that we were before in a low of 356.30, which is the lower deviation band. If we break our deviation bands, boy, then we're really going to come down hard. So just know that we're at a critical spot right now. And so try not to leverage too heavily out there. That's not financial advice, but just something that we're looking at. And on a daily chart, you can see, where those bars can't carried over. You can see here, we tagged the middle of this deviation band on that last rally and pulled all the way back down. And we're down to this lower support line. So we'll see if we can hold that. If not, new lows as in our near future. On a weekly chart, see that bar again, support right here. Haven't dropped to lows here. Our lower deviation bands down here, at 344. We got lines down here at 320. So we'll see how this week starts to shape up here, but hopefully we can stay and climb back above the 200-day moving average, which would be ideal. If we close this next week above the 20-day moving average, that's going to be helpful for the market. But probably not going to happen as long as the Feds continue to be hard on interest rates going up. Triple Qs, same thing. You can see this is the distance on that double top on the triple Qs. And if we measure down here, we actually didn't come down quite as far. It also almost puts us right at the low again, 267.10. So, triple Qs could come down a little bit lower based on the measurement of this move on this last rally. So we'll see. We'll see what happens. See who's going to be the leader in the market. Triple Qs again on that support line could break it a little bit if we measure that out. But hopefully we can just kind of rally from here and break to the upside rather than the downside. On a weekly basis, same thing, same look. And here's, looking at, what's the possibilities if we do fall through. Here's your support down here, 233, 231 area. So that would be the drop because there's no support in this area really except for that 233 on a weekly chart. So just give you an idea of kind of how we're measuring the distance and where things are falling. So, that's a possibility if we fall through and close below this line. Look for downside down to 233.49, so the last pivot. Looking at IWM, again, on an hourly chart, looking for, we have support down in 167.65. Didn't quite hit it yet, so it's possible we could come lower and tag that hopefully and find support. If not, hopefully we can move up from here. And you see here where IWM came up close to that upper trend line and then pulled way back. So we're kind of sitting right in the middle with the Russell 2000. The financials on 1 hour. This is where I thought support would find, or resistance obviously when it was coming up here, and it did not. It just kind of fell right through that area. So we'll see. We do have support clear down here at this 30.34, which is kind of where we had the prior pivots. But hopefully, we don't want to go down that far. You see here on a daily chart on the financials, kind of where we came up. We did kind of hug this trend line. Here's the upper trend line with these pivots here. This lower trend line is kind of where we're at, on the 4th of October. So you can see we kind of just hug this and then, trying to get above that 20-day and just could not get above that 20-day and hold it. Which causes us to break back down again. So we're back down about 50% or more back to those lows. So we'll see if we can pop back up this week, or if not, we could chase all the way down to the end of this candle, at least around 30.72. Bitcoin, it looks like a nice little, really a potential bear flag here, based on this downward movement. And that's kind of where we're seeing Bitcoin not holding that, holding up on that 20,000 mark, and just failed to get through that 50-day moving average. So, Bitcoin I can see coming back down here and retesting these 18,000 levels. Ethereum, same way, it's been hugging that 20-day moving average, just cannot get above that 20-day. So very well could fall back through here, back to these lows again, around 1,000, if we do break through this wedge. So we'll see if we can get some strength. But right now, good news is what we need from the Feds, which would be that they're going to, taper, putting in a 3/4 point or higher interest rate increase. If they don't and they stick to it, I think that we're going to see new lows here fairly soon. So that's our stocks, our cryptos. Love to have you join us again. Free chat, free daily list posted before the market opens. So definitely join us. Let's have a great week this week, whether the market's up or down. There's money to be made. So let's make some money together. Stay safe out there. We'll talk tomorrow night and see how your trading went and get a plan for the next day.